Let's get some of those highlights unpacked now with Chantal Marx, who's the Head of Investment, Research and Content at FNB Wealth and Investments. Chantal, as always, many thanks for your time. Let's start with the overall market performance. We are seeing that the JSE just under 0.33% in the green to end of the day. And this comes after that huge sell-off that we saw with the NASPER shares, but that's also seeing somewhat of a recovery.
Yeah, so the JSE actually bucking the global trend for weaker markets today, and it seems to be very much driven by NASPER process and that rebound in sentiment around Chinese tech, or partial rebound at least in sentiment around Chinese tech. SA Inc. was a little bit under pressure today. We did see retailers come off a little bit, but they did have a pretty strong day yesterday. Overall, if you look at the top 40, more shares declined than were up, and that just goes to speak again over the sheer size of NASPER process in the index.
Let's get into some company updates that came out now. We had Liberty releasing results indicating that they had to increase their reserves to provide for the pandemic and the increased claims that they saw coming through. And not an easy time for them. The one good thing is that deal that's coming through with Standard Bank. What did you make of the numbers that they released today?
Yeah, the deal with Standard Bank should at least provide a floor for their valuation. But yeah, I mean, the result does point to difficult conditions. That increase in the pandemic reserve, I think, was well guided for, but when it was initially announced, I think it was a bit unexpected. They seem to have had an adverse mortality experience, which means that they thought that they were going to settle a certain amount of life insurance claims, and it ended up being a lot higher than what they anticipated. They're also thinking that it's probably going to remain high for some time, which is why they further bolstered that pandemic reserve. On the plus side, though, I do see that their underlying operational performance has improved. Sales have improved. Unfortunately, new business margins are still pretty weak, but there's at least scope for improvement there as soon as you see some sort of a recovery in the economy.
And then finally, and very briefly, let's talk through Telkom. They're announcing their new CEO who's going to be taking over in October. Some shareholders a little bit concerned, but we should be a little bit hopeful because he was the head of the consumer business, and that's been able to grow significantly over the last few years under Themba Maseko. Sipho, rather.
Yeah, Mr. Takabong is actually telecom royalty. Sorry, not Telkom royalty. Freudian slip over there. But yeah, I mean, I think that he's a steady pair of hands to steer the ship going forward. The focus is on that mobile business. It is on the fiber business, and I think that he will be very well suited to take over the reins there, having come into the Telkom mobile business and turned that story into one of profit and prosperity, really offsetting what was a declining business model in terms of fixed line.
Right, Chantal Marx, that's all the time we have. She's from FNB Wealth and Investments, and judging by her background, a fellow plant parent herself.